I would say hawkish minutes from that October meeting, and maybe more hawkish than the market already expected. Many at this meeting, in the October meeting, suggested it was appropriate to keep the funds rate unchanged for the rest of the year. Only several supported further cuts. These are confusing minutes with a lot of back and forth. Clearly, there was a big debate at this meeting about the October cut and about December cuts. Let me go through some of the headlines. Most were concerned that rate cuts could add to the risk of higher inflation becoming entrenched. Participants, one thing they did agree on, they generally agreed that there was upside risk to inflation that was elevated and downside risk to employment was also elevated. On the debate over the October rate cut, many were in favor of lowering the target. However, some of those could have gone either way and supported no cut. Several were against lowering the rate outright. Those in favor, they focused on downside risk to employment and inflation diminishing or being little change. Those opposed to that rate cut said progress toward inflation had stalled, inflation had actually increased, or there was a lack of confidence in the Fed heading back to the 2% target. The Fed debated how restrictive policy was relative to the neutral rate. Some said the Fed was still restrictive even after the quarter point. Others said that they saw the economy as resilient. Financial market conditions were supportive, and there was no clear sign that the Fed was actually restrictive at all. There were obviously strong differing views about the near-term course of policy, and as I said, there was a huge debate over December, but it seemed, Brian, like most sided with not cutting rates. That's my read of the minutes, but I will tell you they were complicated, and some could come away with a less hawkish view of these minutes than I did.